In this video, we're going to be discussing the best Forex trading strategy that beginners can take advantage of. Now, if you're just starting a trading journey, or maybe you've been in this field for a period of time, you would have come to realize that there are multiple trading strategies out there. There are many ways to approach the financial markets in general, and there are many ways to day trade, swing trade, or even scalp the Forex market, right? But the question is, what is the best and easiest trading strategy that a beginner trader can take advantage of, right? A strategy that is simple, easy to understand, and easy to identify on the charts. So that is what we're going to be talking about in this video. So by the end of this video, you would have a simple trading strategy that would help you capitalize off of different moves in the Forex market and also make some good money, okay? So let's go to the charts. Okay, so first things first, okay? Let's make it clear that when it comes to Forex and trading, we are not trying to reinvent the wheel. All we are trying to do is just identify patterns that repeat themselves and capitalize off of those patterns. What we're trying to do is just find a simple pattern or simple thing that the market does repeatedly, okay? And then we capitalize off of those moves. So that way we know that, okay, this particular strategy that I trade with is actually something that the market does very often. So I can actually rely on that strategy and capitalize off of the strategy periodically, right? So let's just establish that fact first. So secondly, the fact that you're looking for a trading strategy basically means that you have some basic understanding of what the market actually does. So meaning that you understand how to read the charts to an extent, you understand what the candlesticks mean, you understand what pips are, you've gone through the basics of what Forex trading actually is and how to read charts, right? So that's why you're looking for a strategy. If you have not done that, I actually have a couple of videos that you can watch so you can learn a couple of basics, right, before you actually find a trading strategy. So let's start off on a clean chart. So I'm going to just right click and select remove drawings. This is Euro USD on the daily time frame. Now, like I just said, you watching this video essentially means that you know how to read charts, right? So now first things first, right? So if you just take a look at the screen, you would see that the market is basically going from from the top to the bottom and then back to the top again, right? So first things first, you're just going to notice that the market basically moves in a pattern. So if it switches from a downtrend and then to an uptrend, it continues in that uptrend until it decides to switch again, okay? So when you come onto your charts, the very first thing you have to do is identify the direction of the market, okay? Identify where the market is going to. Are we moving sideways? Are we going up? Are we going down? So that's the first thing you do. Now, this is Euro USD. Clearly, we are going up, right? Because if you get your arrow, you would see that even if, let me use the path tool, even if price makes, some sort of up and down movements, essentially, we are going up. That's what's happening, right? So if you're not clear, you can use the path tool, just like I just did, to trace out the movements. And if you take it out, you will see that we are clearly going to the upside, right? So simple. We've identified that the trend is in an uptrend. Okay, so after we identify that factor, we now need to identify areas that price likes to react off of, right? So that's where stuff like support and resistance, supply and demand actually comes into play. Okay, so if you don't know how to do that, an easy way to do that would be to get either your horizontal tool, or you can even use the rectangle tool, right? So if you get your horizontal line and just place it on your screen, and then you begin to just drag it. And where you see a lot of touches, you leave it at that spot. So for example, we have a couple of touches at this particular point, 1 and 2, right? And if you also look to the left, you will see that price actually reacted here and also reacted here and here as well. Okay, so that's what we see. Okay, so now you do that and the other thing is, when you're doing this, you also have to do it close to the relevant price action that's happening right now. Because drawing a line at this point here, right, we have a couple of touches at this point. Although it is a valid horizontal line or valid zone, price is very far away from this particular zone. Do you get what I'm saying? So you want to draw out, your zones close to the relevant price action. This right here is the relevant price action area right now, right? So this zone we have here is a relevant zone. Okay. So now that we have drawn out that zone on the daily time frame, we are going to go down to the 4-hour time frame to do exactly what we just did. Okay, so on the 4-hour time frame, we're going to be seeing a bit more price action present itself. So we're going to be seeing more candles, and that's going to give us more information of what is happening right now. Okay, so this is the 4-hour time frame. So again, we get out the path tool and we just see that price basically is going to the upside. Price is going to the upside, right? So again, if you're not sure of the direction, you can do exactly what I just did, and essentially we are moving up. Okay, we're basically going up. So let's take that out. We have identified that we are in an uptrend. Now the next thing that we should do is identify a potential area that price could come back to test before it continues to the upside. And the idea behind this is what is called impulse and retracement. When we are going up in the financial markets, whether it be crypto, stocks, whatever it is that you trade or invest in, if you look at a chart, you would notice that price does not just skyrocket to the upside like this. It would make some form of pattern as it goes along. It would go up, come down, go up, come down. But essentially, it would start creating higher highs as it goes up, right? A simple way to get into the market would be to be waiting for a potential retracement, right? So the impulse is basically the direction of the main trend, and then the retracement is basically the opposite. So when we're in an uptrend, the impulse is whenever price is going up, and then the retracement is when price is going down, right? So basically what the idea behind this trading strategy is, you're going to be waiting for a potential retracement to end and then get in so you can catch the next impulse, right? Super simple. So how you do that is, number one, by identifying the direction, and then secondly is identifying zones where price could potentially come back to test before it continues to the upside. So for example, Euro USD on the 4-hour time frame, the next zone we could potentially wait for price to come back to test would be up here, right? Because we have, let me just zoom in a bit more, because we have a test, and then price finally broke it. So based off of the impulse and retracement we just talked about, we just got a nice impulse. Next is retracement for next impulse. Okay, so now the thing is, we don't know where price is actually going to retrace to. That's why we always have to have multiple zones, right? So we have this first zone here, right? This is the closest zone to the relevant price action. So this would be our first area of interest. So basically expecting price to come here to continue to the upside. Yeah, so that's basically what we should be looking for, right? Now the next question is, if price actually comes to this zone, how do we know that it's actually time to get in, right? If price comes down here, what do we look for to get into the market? So that's where the candlestick analysis comes into play. I actually have a video explaining the different types of candles and what they mean, so you should go check those out. But if you're in an uptrend, you're supposed to be looking for some form of bullish indication. So that could be a bullish engulfing candle, right? You should look for a bullish engulfing candle in the zone. You should be looking for some form of wick to the downside, right? Depending on type of candle that prints in this zone, right? So mostly bullish pattern candles is what we should be looking for in this zone. Now let me show you where this has basically happened in the past, because what I'm explaining right now is stuff that happens all the time on different currency pairs, even indices and so on and so forth, right? But of course, it's your duty as a trader to verify what I'm telling you, because you cannot just take it for face value. As a trader, you should always verify every trading strategy that you decide to use, meaning you have to backtest. Okay, you have to put in the work. You cannot just say, okay, this person said this, so I'm going to just do that. No, you have to verify what I'm explaining to you right now before you start using it. Okay, so meaning go to your trading view, click on the replay tool, and just test out what I'm explaining. So let me just go to the past on this particular pair. If we get the horizontal tool like I just explained, you would see that we have a couple of touches in this particular zone, right? We have a touch here, and then price basically made an impulse and then a retracement, and then it played out a bit before it continued to the upside. Okay, so now what I was just explaining to you, right? So in this instant, price actually came down here and gave a couple of indications. It didn't just create one candle and then it continued to the upside. It gave a couple of indications and then a couple of confirmations before it actually reversed to continue going up. So let me show you what that looks like. So now if you look at the candles, okay, the candles, this is basically the language of the markets, or the language of my particular chart, because I have a candlestick chart, right? So look at the candles like the market is basically speaking to you and explaining to you what it's about to do. Okay, so if you look at the candles at this zone that we just drew out, first of all, it looked like price was trying to break through, but then we see a huge rejection with this candle here. You see this huge wick right to the downside. That basically means that there is a lot of buying pressure in that zone. Okay, now right after that, price basically struggled. It did not just create this wick and continue to the upside. Price basically struggled because it was basically like a tug of war between like buyers and sellers, right? You know, sellers try to push the market a bit lower, but then again, the next pattern we see in this same zone is what? A bullish engulfing candle. I hope you see it. This blue candle right here basically engulfed the white candle, which is my bearish candle. Yeah, so this is another bullish pattern, basically indicating that buyers are coming into the markets. Okay, and then again, sellers try to push the market lower, but then again we have buyers pulling the market to the upside with this huge wick to the downside on this particular candle, and then followed by a bullish engulfing candle. So all of these three indications were basically enough confirmation to indicate that, okay, buyers have come into this market to go long, right? So if we had gone long at this point at the close of the candle, then we place our SL right at beyond the area of fluctuation. You always have to place your stop loss beyond the area of fluctuation, and then your target at a reasonable price point. So this particular point was drawn off of the daily time frame, right? This particular zone. So there's a high probability of price going to that zone again. So going back to the 4-hour time frame, we see that price basically went up, even if it went into profit and then rejected, right? Because remember that even if you get into a trade, you should hold to target or SL. Okay, you should hold to target or SL, and you should also accept the risk. So you should always use risk management so you can actually accept the risk you're putting on every trade. So even if price came back to our entry and went to a bit of drawdown, we see that it created some more bullish patterns and then it continued to the upside. So I hope that explanation was clear. That is a super simple way to read the financial markets or to read the Forex market, taking advantage of trends that are already established. So I'll see you guys in my next video.